There is nothing like the high of a bubble, the thrill of watching prices go up, 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 the rush of profits in your pocket, and the sense that no matter what you do, you cannot lose. Life is good. But life was good in 2006 too. Neighbors were bragging about flipping houses, banks were shelling out loans, and everyone felt like a genius. Until 2008, when in a matter of months, that euphoria turned to sheer panic and ended in despair. The problem with bubbles is never how they start or how they feel on the way up. It's how sudden and violently they pop. And every bubble throughout history, going back thousands of years, has popped. But here's the thing, every bubble also follows the same cycle. So while we know how they end, we also understand how they operate. So if you understand the 4 phases, you can spot delusion, you can understand what denial looks like, and you can get out before panic leads to collapse, taking everything with it. Now, if you've been watching my videos for a while, you probably have seen the chart we're about to look at together, but I have read your comments. Many of you are asking, what is going on with the markets? How are things possibly still going up given everything that we know? What is coming next? And while I don't have a crystal ball and I can't see the future, I can look at history and patterns and cycles, which is what we are going to do together today to try to understand where we are today and therefore what is coming next. Now, if we look at this chart, it's broken up into 4 phases. We're going to start over here on the left with the stealth phase. This is smart money. Now, as far as bubbles go, they typically start with some kind of shift, a breakthrough of some kind. Maybe it's new technology, maybe it's something different and exciting. The last time I used this chart and talked about what was going on in modern day, we were talking about AI. But to be honest, that was maybe about 8 or 9 months ago, and things have progressed significantly since then. But I'm jumping ahead. We are going to talk about the AI bubble a little bit later in this video, but let's start here with smart money. So the stealth phase is going to be long before you've ever heard of anything that's going on, right? This is typically insiders, those with insider knowledge. This is actually high risk, high reward, because at this point, anything that anyone's investing in is completely unproven. That is where smart money piles in. Now, there's this kind of initial takeoff, right? And as soon as that happens, as soon as it's on the radar, that shifts us into the awareness phase, phase 2. And as the takeoff continues, this is where institutional investors get involved. So it's kind of that next circle. It goes from the insider smart money to institutional investors. So a little bit wider, some chit chat. But it's still not on the widespread mainstream media's radar at this point, right? It's still kind of only those in the know or those in the industry. This leads us to the first sell-off. Now, there's this first sell-off. A lot of people are happy to get in, get out, make their profit, disappear. But those who understand what's going on often hold on because it's a bear trap. They get through it. And as soon as we get above that first sell-off, this is where the media comes into play. And if you know anything about the media, you understand that as soon as they get involved, it changes everything. Media attention puts this on everyone's radar. So this is where the enthusiasm comes into play. This is the mania phase. Now, the mania phase is typically when most people out there hear about these investments, right? This is where enthusiasm takes hold. Because if the media is talking about how this is going up, 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 well, suddenly everyone has FOMO. They want to be a part of it. So people get really enthusiastic. Now, enthusiasm creates momentum, right? The public here is pouring in. And as this enthusiasm continues, well, things just go straight up. And it is human nature to think that as things go straight up, they're going to go straight up forever. That's a common fallacy. So we have everyone pouring into this, piling into this. This is where, as greed starts to take hold, common sense disappears, right? This is something we often see. This is no longer based on actual valuations. This is not based on business fundamentals. Anyone who's investing at this point is just looking to capitalize on what everyone else around them is doing, right? Your mailman is telling you, oh, you have to buy this. Joe Schmo down the block is telling you, you have to get in on this. How are you not there yet? And you start to think, okay, great. It doesn't matter if I'm late to the party. I just have to get to the party. That's where the greed comes in. Common sense disappears. But guess what? Things are still going up, so you made the right decision, which creates a sense of delusion, right? These are going to be the people in 2007 who had 10 different properties. They were leveraged to the hilt and thought, why not go for lucky number 11? And at the time, it seemed like it was a great idea because everyone else was doing it and things were going well. So why would you ever stop the party? That's the delusion, because you think that at this point, we're just going to ride this ride forever. This creates the most dangerous part, in my opinion, which is the new paradigm, right? The new normal. This is how things are going to be. We are going to be on this upwards trajectory forever. Now, about 8 months ago, when I made this last video, I said that we were somewhere in greed leading to delusion. I actually think we've fully crossed over into delusion, and we are now at this point where people think this is how things are going to be moving forward. So we're moving up this line, which is a scary place to be. And sometimes people ask me too, I think I got a lot of questions last time. So how long does each stage last? How do the phases work in terms of time? There is no real answer to this. Sometimes they can be longer, sometimes they can be shorter. And we're going to look more closely at this new paradigm. But before we get back to the chart, go with me on this. I want to show you something I read this week. Now, this is where AI ties in. So Bank of America shares an eye-popping chart showing a potential stock market bubble. Yeah, you think? Okay, so keep that new paradigm in your head. Let's look at this chart. Now, I love the title of this chart. It's called It Better Be Different This Time, if that's not a title, right? New normal, new paradigm. This time is different. But the reality is, you know, and I know, it is never different. Throughout history, every single bubble pops. I don't know how many times I need to say that. I cannot tell you when it's going to pop, but every single bubble pops. But, you know, maybe this time it is different. It never is, but we'll go with it. Let's just look at what's actually going on in the stock market. Now, this is showing the S&P 500 price to book value ratio. And you can see here that, you know, typically it's somewhere between 1 and 3.5. I think 2 is the average. 2 is the average. But what do these numbers actually mean? Well, essentially, we're looking at the market value, so what people are willing to pay for a stock, versus the book value, or the value of its net assets on its balance sheet. So we're talking about true business fundamentals versus hype and speculation. So if it was 1-to-1, then essentially people are valuing it exactly at its book value. Market value and book value line up. Now, typically, like I said, the average is 2. So most of the time people are valuing it above its net assets because you assume that the company is going to grow and be profitable, and you're investing and valuing it outside of what it's proven to date. But when it starts to get up into these extreme numbers, that's when we've lost the plot. This goes way beyond any kind of practical reasoning. This is hype and speculation, not true business fundamentals, right? This is the delusion that the profits are coming, that this company's going to blow it out of the water, but it's not based on anything sound. Now, this isn't the first time we've seen these extreme market over book valuations. 5.3%, however, today in August of 2025 is record breaking. This is the highest that we have seen in the entire history. This is insane, the price to book value. The last time we even came close was, guess when? 2000, 5.1, pretty close, 2000, right before the dot-com bubble burst, and we saw what happened after that, straight down. Now, we're going to look at this back on the original phases chart in a second, what we can see from this, but this is not good, you guys. This is, again, crazy town. This is us just thinking that things are going to go up, but we have no proof. And if you want even more to dig into what exactly we're really seeing, what's driving all of this growth, well, let's look at market concentration. All right. So this is the percent of S&P 500 by market cap, the top 10 stocks. What this means right here, what we're looking at right here, current day, is that the top 10 stocks account for 40% of the market cap. 40%. You heard that correctly. The top 10 of the S&P 500 count for 40%. The other 490 account for 60%. I mean, that is insane. So what happens if any of these companies, it turns out to be a big sham, a big smoke and mirrors, all air, poof? What happens to your investments? That's the question I want to ask. But again, no one's thinking that way. It's the delusion, the new paradigm. It's taken hold. It's taken hold. That's where we are today. But let's go back to the 4 phases, okay? Because like I said, I think this delusion is a lot of where we are right now, but shifting in a new paradigm. Because I talk to people and I say, you know that this is all hype and speculation, right? This isn't true business fundamentals. And they go, I know. I know, which shocked me at first. I go, what do you mean you know? And they go, well, I don't care if it's hyper speculation, I'm making profit, which is an important distinction to be made here because I'm all for people making profit. Of course, I love that. But you better make sure you have a strategy in place for when things take a turn into the blow-off phase. And we'll talk more about strategy in a minute. But this is where denial sets in, right? Oh, it's just a correction. Oh, it's just a correction. In fact, it's just a correction so much so I'm going to buy more. I'm going to buy more because I know what's coming, right? This is classic denial. This is what we always see. And then they think, oh, I was right. I was right. You were wrong. Ha ha. Return to normal. But guess what? It was never the new normal, right? This new paradigm, return to normal. No, it is a bull trap. And guess what? Everyone pours back in. Those who are in the know, investors, institutional money, they pull out. Guess what? Everyone else happens. Oh boy, it is downhill from here into fear, right? People start to get scared, but they're holding on because they have too much to lose, especially those who got in over here around greed and delusion up at the peak, right? They are trying to just maybe break even, hope it kind of ticks back up, but no, it's too late. At this point, it is just going to be a straight down shot into despair. And unfortunately, that's where a lot of people are going to be left. Now, again, I don't know when we are going to cross over into this next phase, but it is funny for me. It's not funny, but I did a quick Google search, just like someone would. I just popped in AI valuations. I was just curious what the news was saying. And I haven't edited this all. You can see I looked at some of these, but OpenAI CEO himself, right? Sam Altman says AI bubble is forming. NVIDIA earnings showdown. Can AI growth justify sky-high valuations, right? It basically saying that the growth, the proof of the profits is not there. And this is not to say, sometimes I'm mistaken when I say this is not to say that AI isn't revolutionizing or changing the world the same way the internet did back in 2000. It's just that the same way back in 2000, it was unproven a lot of the investments that people were pouring into, right? Things that we hadn't even thought about yet hadn't come to fruition. The way the internet was going to be used and anything with .com on it suddenly became like a shiny new toy. And that's a lot of what we're seeing with AI right now. We don't know what global competition is going to look like. We don't know what the next year is going to look like with an AI. And it's a race, and not everyone can win the race, right? Anyway, big tech's AI bubble. Meta's move hints at a looming crash. Watch investors question valuations in AI trade. AI valuations are verging on the unhinged. This goes on and on and on. There are now 498 AI unicorns, right? Again, okay, great. But for how long? How many unicorns can you really have? I don't know. I think, again, when we look at this, it's clear to me that we have this delusion going on that this is going to be the new normal, and ultimately it is not sustainable. But I will say there are a lot of people who come to me and go, okay, but Taylor, what about all the money printing we're doing? Isn't the money printing going to keep pumping everything? To be honest, yeah, probably. So maybe there is more profit to be made for now. I, again, am not anti-making profit. I am just pro being protected, right? I saw an interesting quote actually this morning from Warren Buffett when I was looking up some stuff. An idiot with a plan can be a genius without a plan. And I think it's so true, right? An idiot with a plan can be a genius without a plan. It is so important to make sure you have a strategy in place. If you want to gamble and take risks, that's fine. Again, within reason. I know people who are telling me, oh, I'm taking out equity on my home. Oh, I'm doing everything I can. I'm borrowing all I can right now to go all in on the Magnificent Seven, right? Or this gamble or that gamble. That is reckless and dangerous in my opinion. Again, I'm not a financial advisor, so I can't tell you what to do with your money, and everyone's situation is different. But at the end of the day, it is so important to make sure you have a strategy in place, one that is outside of this system, one that when things do take a turn for the worst, right, when this blow-off phase enters, that you are not part of this fear crowd, that you're not sitting there wishing you had done something sooner. That is my hope for everyone out there watching. And that is why I think it is so important to make sure that your strategy involves something tangible and real, not something speculative and just based on hype and hope and dreams, because that's not a true strategy. right? That's not going to protect you when everything comes crashing down. So for me personally, that of course is physical gold and silver. That's how I sleep well at night. That's how I know even if this starts to happen, I'm protected, right? Doesn't matter. There is no despair for me because I know I have my gold and silver in place. And that's what I want for everyone else out there watching. Now, if you are new to gold and silver and you want to learn more about how it can protect your wealth or just understand more about how gold and silver has helped other people through situations like this, we have an incredible resource that is called the ITM Gold and Silver Guide. It has a ton of great stuff in there. If you don't already have your copy, scan the QR code, download it. It's totally free. Get your copy today. I highly recommend it. If you have questions or you want to understand what a strategy would look like for you, something that is tailored to your needs, your goals, and your concerns, that's what we're here for. We have been helping clients just like you for the last 30 years. We have an expert team of analysts. You can call us at the number below. You can, again, scan the QR code, or there's a link in the description where you can set up a time that works best for you. I highly, highly, highly recommend that you do this because, again, it is too important to leave to chance. You want to make sure that you have a strategy in place for what is coming next. That way you can do whatever you want. You can be protected, you can be prepared, and you can sleep well at night. And in the meantime, I so appreciate you being here. I'm Taylor Kenny with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.